Hello everyone, welcome to another live stream, another trade recap and forecast. So we're gonna start with the 6 basic currency pairs as always. If you have any questions, you want any chart analysis, make sure to put them in the comments. I'll definitely get through it. I read absolutely all of the comments, so it's really not an issue. If you have a instrument that you want me to analyze that I do not personally trade, again, not an issue either. I basically analyze anything that is on TradingView. So let's get into this analysis. So the title of this live stream is that I'm searching for a buy setup on the euro and US dollar. And I am definitely still interested in buy setups. What I really liked is this price action right here. So we had multiple bullish legs. Here was the first one. I was looking for a buy setup, again, like a continuation. I used the flag and I used the break and retest methodology to exploit these sort of moves. So basically we had a nice move up, but then an entry did not form, unfortunately. Instead, we just retraced and then broke the high with momentum, I believe. Yeah, so at this point, I did have my order on as well for break and retest. I had it right here with a 10 pip stop loss, if you're wondering. And basically, again, no trade for me because the price just went up without me, at which point I did remove the order because then it was just too far away. Then again, after this impulse, looked for an entry setup, but nothing formed. I was definitely looking for a flag. A flag here would have been perfect. So this would be the first high, first low, second high, and then we would wait for the second low and for the bullish candle to form to be the entry candle. But again, nothing formed right here. Instead, price broke the high with more momentum. Yeah, more momentum. This was not really enough momentum after a bit of a range, but then we continued up. And at this point, this was still looking absolutely perfect, especially with this clean close on the top. So I was highly interested in buy setups. Once again, we had a really strong established uptrend, which looked very high probability to continue. But again, no entry formed. A flag here would have been perfect. Unfortunately, we got, I think this was news. This was, let me check. So if you go to Forex, what is it? Forex calendar. And let's check out today. So it was CPI. Okay, so it was CPI, which is usually very volatile. So this was not surprising, but it kind of messed up my whole entry because I was looking again for a flag and it broke the high, left a huge wick, broke the low, left a huge wick. So yeah, that's a bit of a concern. After that, the price did continue up. Now, at one point, this candle had a clean close on the top, so it was not printing a wick. And I was still very interested for buy setups because usually if you get a candle like this, let me highlight them. So like this one and like this one, usually price continues up. So that is a very high probability sign that the price will continue to the upside. So if this current candle was printing that sort of a clean close right here on the top, yes, I would have been still interested in buy setups. Unfortunately, in the last 5 or 10 minutes, we had a wick print. Okay, so we had the price retrace a little bit, print a, I would say it's a kind of a big wick on the top. And after this candle that broke both the high and the low, printed a huge wick up, huge wick down, and then this candle leaves a wick as well, I am kind of no longer interested in a setup, okay? I would definitely not take a flag here or a break and retest. I really don't think I would take it because it's just showing me too much weakness. And these news candles, if they look like this with huge wicks on the top and huge wicks on the bottom, they usually tend to signal a range-bound market. So that is not good. You do not want to see a range-bound market. So yeah, this wick, if this candle wasn't here, if this one did not exist, but we just had this blue candle, okay, and it still had the wick, yes, I would be still interested in buy setups because then there would be no sign of volatility and the price wouldn't break both the high and the low. So these two warning signs are just very, very bad, even though prior price action is absolutely perfect. So as you can see, prior price action looks extremely clean. As I said, huge bullish legs, pullbacks are very small, showing no selling pressure. Even with that extremely high probability prior price action that doesn't happen often, it's a very rare occurrence that you get this sort of clean price action. Even with that price action, even if it with it being Wednesday, because if you have been with the channel for a bit longer, you know Mondays and Tuesdays predominantly range bound days, and I tend to want to take trending entries on a Wednesday or a Thursday or a Friday, right? So this being Wednesday is another confluence to take the trade. But again, two major warning signs that I just highlighted, and that is just not good enough for me. So what I want to see more bullish momentum kick in like this, okay? And then I would look for a buy setup. So let's see if this current candle that is running, if it can print bullish and if it can show me a nice clean close. That would be great. Otherwise, I'm going to be more patient, unfortunately. So yes, this pair is on the watch list, but it's starting to print warning signs, so it's starting to show me a bit of a concern. That being said, let's move. Was this? Yeah, okay, this was news. This is a good indicator on TradingView. Like you can see all the news. It's pretty cool. So this was PPI right here. Yeah. Next one, Euro and the Japanese yen. Unfortunately, all the JPY pairs look pretty range bound. They look pretty corrective. I'm not seeing any trends. I'm not seeing any high probability patterns. So I'm going to be more patient on the JPY pairs, to be honest with you. So Underhill is looking for buy setups on the euro and US dollar in that pullback. So are you currently in trades or do you currently have a pending order in the market? Let's bring it back. So probably you're buying maybe in these pullbacks, or so if you want, you can oh, you're currently in a trade. Okay, nice, cool. From what level? From which level? Also, what's the target? Are you using a trailing stop loss methodology? Just or do you have a fixed profit target in mind? You can put it in the chat. I would be very interested to know, because currently I don't see a slowdown here. I don't see any signs of a slowdown. So that is looking very high probability to continue up. Yes, I'm seeing warning signs, so I don't want to get into buy setups. But if I was in a buy setup from here, I wouldn't see any signs of the price actually slowing down. Okay. So 1.10180. 1.1. From here. Okay, cool. Nice. Yeah, I was definitely looking at this pullback. 5, 8, 9, take profit. Okay, nice. And which methodology do you trade? Like ICT or something like that? This was perfect. I would have 100% taken a flag here. So at the level you have entered, I think it's a very, very good entry level. Congratulations, and hopefully the trade will hit the take profit. Good luck. EJ, as I said, pretty range bound, pretty corrective. So I'm gonna be more patient on the euro and the Japanese yen. Aussie and US dollar. AU is looking. It's looking corrective. It's looking a bit corrective. This price right here was flat and range bound. I did actually take a trade. I'm gonna mention that. Right here, I took a liquidity sweep setup. Just a second. right here, and 10 pip stop loss. Underhill says that he studied ICT but made his own style and trading it. Nice, congratulations. Yeah, that's the best way to go. So take a bit from a mentor and then basically develop your own style, what suits you personally. That is definitely a smart way to do it, but you need, of course, an extensive backtesting history. So you need to backtest minimum, I would say, last 3 years, and that's the minimum. I would say 5 years is the optimal. So last 5 years of price action on one currency pair, and then prove to yourself that you actually do have a profitable trading edge. Because without backtesting results, you're just a gambler. You do not really know if your strategy works long term. It may work good in one market condition, but then in the other market condition, it may switch. So I know a lot of mentors online. They develop a strategy, but then they backtest it only on the last 6 months of data. So yes, it's going to work on the last 6 months, and then they release it and say that they made 100% in 6 months. Yes, it's going to work on those 6 months, but market conditions are constantly changing, constantly shifting. So what will happen a year from that point, or 2 years from that point? That strategy is just not going to work, because you can have periods where one approach produces an enormous amount of percentage, but then for 5 years it produces only losses or mainly losses. That's why you have to backtest at least the last 3 years of price action. And if a mentor online cannot give you at least his backtesting results, I mean, he should give you his live trading results verified, possibly by MyFX book. I think nowadays that should be the standard, and you do have some mentors that do it. But if they're not doing that and they're not showing you backtesting results from the last 3 to 5 years, well, then you have nothing to search there. I mean, it's just a complete scam in that case. So any mentor that you're looking at, make sure he has a verified track record. It can be MyFX book, it can even be a DarwinX account, and that they have backtested results from the last 3 years minimum, so that they can actually prove to you that they do have a trading edge. Underhill says, I got 5 years of data, no worries. Yeah, that's good. That is good. I would say 5 years is sufficient. 6 months is really nothing. I also have 1 year of live trading data. Awesome, nice. 6 months is nothing in backtesting. It's just you're not gonna have enough time for the market conditions to play out, so that's nothing. But 1 year of live trading data, nice. That is great. So you're on your way. You have your backtesting done. You have your live trading done as well. You have proven to yourself that you do have a trading edge and that you can execute that trading edge in the live markets. Now it's just a matter of rinsing and repeating, basically executing the trade plan, making the percentage, getting funded if that is your goal, and extracting the money from the market. So just keep working on it. Keep executing the trade plan, keep on taking setups. I'm going to go through this Aussie and US dollar setup because I took this trade. Let me see if I took anything else. I'm going to go into my trade journal. I did take a continuation, but that was 3 weeks ago. So yeah, the only trade I have taken, I believe, this month is this one. So this is a liquidity sweep. It is a range bound entry. And what is the methodology behind it? Basically, identify the range. That is done. Identify the areas of interest or areas of liquidity, areas where the price is likely to reject from. I would say these are the areas. So you're going to have people selling right here. You're going to have them selling right here, putting their stop losses above these two highs, making this area significant and full of liquidity. On the bottom, you're going to have some traders buying in these legs, possibly putting their stop loss below here, but definitely above here, below here as well. So these are the areas of interest. These are the areas where I expect the price to reverse when it hits them. And as you can see, price taps the upper liquidity area, breaks into it. Let's count the pips. So this one, this high is a bit higher, so I'm going to focus on this one. Around 3.5 pips, that is enough for me. Okay, I'm looking for at least a 3 pip break into liquidity, 3.5 pips, so that passes the initial checklist. And then it rejects with a red candle, right? So now, for me, this is a high probability trade. I see a couple of confluences for this liquidity sweep setup. First one is the flat range. So this price looks very flat. Then you have the multi-tap. You have two highs getting taken out. So not just one, but two major highs getting taken out. And then you have a shift in momentum liquidity. You identify a big red impulse, and it's right here. You're going to have a lot of traders selling here, and I mean a lot, placing their stop losses possibly above the high, making the area of liquidity even stronger. So three major confluences, and then I execute here, 10 pip stop loss, aiming for a 3 to 1. What happens next? Well, I run into a bit of profit, and then actually I do close half of the position off because of PPI. I think it was PPI. Yeah, see it here, PPI. So PPI was approaching. PPI, CPI, NFP, very volatile news events. Usually the spreads go up. Erratic price action is happening. Lots of wicks, lots of volatility. So there is a high chance of you getting taken out for even more than you initially risked, right? That is why right before PPI, I did close half of the position off. Look, if I was in major profit, if the price was here, I would leave everything in, because then I would have what? Around 22.24 pips, let's say, to the entry level. So price can easily be volatile. Do this, and I could still be in my position. But because the price was just, I believe, 10 pips away from the entry level before PPI, I decided it was too risky. So closed half of the position off right here on this candle, I believe. And then got taken out for the rest right here with a 10% stop, a 10 pip stop loss, and it was a net minus 0.1%. 0.1%. So this was the net loss, right? Because I closed a bit, half of it in profit, and I closed the rest in negative. So got a bit lucky with this one, because if I left it running, it would be a full 1% loss. In my trade plan, I have decided to close half of the position off if we are approaching a big red news event and if the price is very close to my entry level. So I need to respect that. Did it right here. In this case, it did pay off. But maybe what could have happened is you could have had this, and then this could have dropped to my take profit, but with only half of a position. So the profit would be a bit less. But again, risk management is my number one concern. I do not want to risk too much of my capital. I always want to look what's my maximum downside, how much am I willing to lose on every single trade, and am I willing to gamble before news for the news event to possibly spike me out and take me out for minus 2%, minus 3%, maybe even minus 4%. I've had that happen, so I got burned. I do not want to take on that risk. Right? So that risk is not acceptable to me. That is why I do close half if it's close. Okay, Underhell, I want to trade with DarwinX, but in my country, DarwinX isn't available right now. I am funded 120K with 5%ers. Okay, DarwinX is not available. That's okay. That's okay. Maybe they will become available in the future. Until they do, focus on FTMO and the 5%ers. You have definitely made the right choice of going with the 5%ers. I do think they are the safest prop firm in the game, along with FTMO. So good luck with your account, and I'm sure you will make some nice profits. If you want, connect your account to a MyFX book. Then you can show that to potential investors, because it's a very good verified track record and very respected, I would say, in the industry. Or if you have a social media presence, it's going to help if you have your MyFX book blasted on there. So good job, Underhell, and let's move on to the next. You have a funny name. Basically, Aussie US dollar, nothing much here. I'm not seeing much. Here, price was kind of ascending. Okay. And then we Pulled back a little bit, broke the high with momentum, nice clean close, but price action was still not high probability enough. It was looking more ascending than actually trending, so it did not fit my personal plan, right? So I was not looking for a buy setup right here. After that, now we're just flat and range bound. I'm not going to put this pair on the watch list. What I would like to see is for the trending entries, I want to see a large push up or a large push down like this. Or for the range bound entries, right, for the one that I took here, I want to see price create a larger, wider range. I want to see this happen. And then I want to see price reject the upper liquidity and the lower liquidity. And then I will just basically sell right here or buy the bottom like this. So that is the game plan. Currently not seeing anything. For the trending entries, I want a large push up or large push down. For the range bound entries, I want to see a wider range form, and then I would sell the top and buy the bottom. AJ, very flat and range bound, very flat and range bound. Not seeing much. I'm not trading the range bound entries on this currency pair. All right. So I'm only looking for the trending entries. I'm only looking for something like this to happen. And I'm going to be more patient with the Aussie and the Japanese yen. I am going to leave it alone for now. Next one, pound and US dollar. It was very interesting. Pound was very interesting from the 8th of August 2024. So it definitely had some nice price action happen on the pound and US dollar, which is a bit of a shock because this pair is mostly corrective. At least recently, right? It isn't always corrective, so it has its good years, but it has its bad and slow years as well. In the last couple of months, I'm not gonna lie, it's been a bit of a tough year or tough months, and it has been a bit more corrective. So starting to wake up, maybe we will see. I'm definitely seeing a change in the price action. I'm seeing a change in the structures. First opportunity was this flag right here. Price action, let's first establish that. Descending, it's not a clean one. It's a corrective descending, so not really a clean descending structure, but a descending nevertheless. Push up, which is exactly what we expect to happen after a descending structure. So we expect a push up to happen. And then a flag right here. I think this was a very nice, very clean flag. First high, first low, second high, second low, blue candle is the entry candle, right? A bit of a slowdown. Yes, that is true. So we had a bit of a slowdown, but the flag is nice. Did I take it? No. Does it fit the plan? Yes, it does fit my technical plan, but I'm using a timed entry on the euro US dollar and on the pound and US dollar. So I was waiting for a later entry at the beginning of the London session. Okay, I was waiting for a different entry style because what I found is in the Asia session, which happened after this candle formed, so the Asia session started. Asia session, often you'll get taken out and then the price will go. So I tend to wait for my timed entry. I tend to wait for the London session and then I execute a setup. But look, technically, this is nice. Technically, this is high probability. It's looking good. I think it is looking very conducive, and I do like this whole price action. Then we went up, and then broke up one more time. I know some traders took a break and retest buy setup right here, placing their buy limit on this high, 15 pip stop loss. I personally didn't because for me, it started to look a bit ascending, right? So the price started to look a bit ascending. And that was no longer high probability, in my personal opinion, for this currency pair. If this was the Aussie and the US dollar, this may have been a bit more interesting. But on the pound and the US dollar, this wasn't as interesting. It wasn't as conducive. All right. So I did not take this entry, but some people did, and they got taken out for a loss. I do think it was a very interesting setup, but it did not fit my personal plan. Let me just check something. 19.4. Okay, so if you used a 20 pip stop loss, you would maybe still be in. But again, if you're using our trade management rule, you would have moved your stop loss underneath this low and you would have gotten taken out. After that, the price just started exploding up. And then we did have another great impulse right here on the top. This was very interesting, very high probability in my opinion. Okay. Nice momentum. Yes, this was an ascending channel, but buyers were definitely gaining traction, definitely starting to be in control with these candles right here. So I was very interested to look for a flag. Very. Same as on the euro and the US dollar. It happened around the same time, I believe. But so we started, yes, started forming, looking nice, very nice. Great. Now we have the first high, we have the first low, second high, waiting for the second low, waiting for the flag line to break. But then we get this. And this is just this just negates the whole setup, makes the whole setup invalid because it breaks the low, retraces. It is a massive red candle, so it is showing massive selling pressure, too much selling pressure in my personal opinion, and not worth it, not good enough to take a trade. Even if it did not break the low, I would still not be interested in a flag because this red candle is far too big. Unfortunately, this momentum could not continue, and now we're starting to range around. We're starting to form a bit of a flat and range-bound price action. And I am just looking for basically a large push up or just a large push down like this. So leaving the pound and the US dollar alone currently, it is not on the watch list. It is showing more range-bound price action than actual trending price action. Yes, there was an indication of the price waking up, especially with this impulse and with this impulse as well. It could not continue. So we cannot force the markets. We must follow what the market is telling us. For now, it is telling us, be more patient, step on the brakes. We're not ready just yet for a major trend. All right, NJ. NJ was interesting. I'm not going to lie. NJ was interesting. When was this? Wednesday? Okay, we covered this one in the last live stream, but basically this was interesting to me. This was looking interesting, but I wanted to see price push up and show me a nice clean close, which it did not. What I can tell you is that the volatility is dying down. So my 12 pip stop loss is not looking bad. Not looking bad. Here, it was looking absolutely tiny. See, we had major volatility in this area right here. But with the current price action, volatility is dying down a little bit. So 12 pips does not look that bad. If we get a trade, I may extend it to, let's say, 15 or 20 pips, but I can definitely see a shift in the volatility. And I can tell you that this is looking much less volatile. We have Tom join. So Tom says, we'll take the advice and have patience. Yeah, for sure. So most pairs are not printing any high probability price action except the euro and the US dollar. Okay, it is now continuing up a little bit. Let's see if this live candle can do something like this. Nice clean close and then a flag. That would be absolutely perfect. That would be very, very high probability. So I'm going to wait for that sort of a setup on the euro and the US dollar. NJ currently. So after this whole fiasco, we started to form a very corrective ascending channel, but an ascending channel nevertheless. So you can see each time the price breaks the high, it leaves a huge wick, retraces, breaks it right here again, breaks this high, retraces, and then again breaks this high, retraces. So I really liked what was happening right here. This is a very good sign that the markets will reverse in the opposite direction. Right? Very, very good sign. Large momentum down. So we even got the confirmation. We even got the selling pressure right here. And yes, I was definitely very interested to look for sell setups. When was this? This was Wednesday. This was very recently. It happened during the night, 3 a.m. Okay, yeah, that makes sense why I missed it. But yeah, nice confirmation, but unfortunately it could not commit. So instead, what started happening is double wicks. Huge double wicks. I wanted to see another big red candle like this, and then I would look for a flag on the bottom or a break and retest, any sort of a continuation pattern. But what I definitely didn't want to see, what I definitely didn't want to see was double wicks and then a shift to the upside, right? Major buying pressure. That is a cause for a concern. Now, to be honest, did a flag form? Let me see. H698 706. Yeah, a flag did form actually. See, there's a flag on NJ. First low, first high, second low, second high. The red candle is your entry candle, but for me, of course, it does not fit the plan. Double wicks here on the bottom, major bullish pressure in the flag, too many warning signs. I do not like this sell setup, but I am going to put it on the watch list because I do think this larger ascending has a real good chance to actually push the price down even more. So if we can get another confirmation, another signature of some major bearish momentum, I would be very interested to look for a sell setup, get in on a flag or get in on a break and retest. That would be very, very nice for the New Zealand and the Japanese yen. Okay. And that is on my radar. I want to see price continue dropping down with a big fat red impulse. Now let's move on to some of the more mainstream instruments, I would say. So let's do the S&P first. I think that should be first. Let me just move it on my watch list. S&P should always be first. If you guys have any questions, any chart requests, anything you want to see on the charts for me to break down, if you want to learn more about the way I trade or basically any questions, make sure to put them in the chat. The whole point of this live stream is to make it a bit more interactive, to help you guys a bit better, to make it more fun for me as well, because I used to do trade recaps, just film them and then uploaded them. That was kind of boring. So let's make it a bit more interactive. And if you have any questions, put it in the chat. I'm just going to continue with the analysis. S&P. Let me start actually on the daily. Wow, this is nice. So it is showing a nice rejection of these levels. Nice bounce. So I know there was a big concern. So Tom says a look at gold. Yeah, for sure. Gold is on the list. Definitely gonna take a look at it after the S&P. Thank you for the chart request. Major meltdown, but now it is starting to form some nice buying pressure. So I would say this is looking pretty interesting. And I know a lot of people were concerned that this is going to be a massive crisis, a massive drop like this. Well, guess what? We are now retracing. So this just may be a big correction, right? If you go to the monthly chart, let's say, this is nothing, right? If you look at the monthly chart, this is absolutely nothing. It's just a small pullback, just a small correction. Compare that to 2020. This was kind of big. And this was pretty big after 2020, or sorry, in 2022. This is a big correction. So this can still go up like nothing happened. 4 hour, not gonna really do the 4 hour, 1 hour. Let me see, because I have been testing the S&P for my trending entries. I want to implement my trending entries on the S&P. I have had some nice trades, but it is a bit tougher to trade. Okay, it's a bit tougher to trade than let's say Forex. This would be a very high probability entry right here. So nice large impulse, one candle pullback. Let me see the H. 428.94. Yeah. So this is a pullback, one candle pullback, break of the high, clean close. This is a nice break and retest setup. I would say this was a very high probability to take. One thing though, if I'm going to be trading the S&P, I don't think I'm going to be using the trade management rule, the trading stop loss rule. Instead, I'll have a fixed stop loss and I'll have a fixed take profit. And I'm going to show you exactly why. It's because of this. The S&P is known to have these periods of stagnation where there is basically nothing much happening and you just get taken out with our trailing stop loss management. So what I'm going to be testing is a fixed stop loss of, let's say, 20 pips and a fixed take profit of, let's say, 3 to 1, right? So I would still be in this trade in that case. And possibly this can do something like this. Right now, it's a bit range bound and corrective in this area. So very excited to start getting into the S&P. I did some preliminary backtesting, but not detailed enough. So once I finish the Aussie and the Japanese yen, because for Zentum trading, we are putting all of our Aussie Japanese yen trades into our trade gallery resource. Once that is done, I'll move on to the S&P. And I'll definitely update you guys on the situation or on the results. Gold, daily. Okay, we're trying to break higher, but until we do, I classify this as just being very range bound, right? For me personally. I mean, it's just going nowhere. So I would need these highs to be broken with some major force, or these lows. Until we break the highs or until we break the lows, for me, this is just a no man's land, and I do not really have a bias. But as far as I can see, we're hovering around the highs and we are putting some pressure on the highs. So maybe this can have a nice bullish breakout. Again, don't just look for the first candle breakout on the daily chart. Also wait for the second one. Second one is your confirmation. I would never focus on just a single candle impulse. Okay. I would always give more weight to actual price continuing and at least a two candle impulse right here. Just give me a second. I think my Discord is going off. Okay. So yeah, two candles is much better than one. That's the daily. Still no bias. 4 hour, range bound. 1 hour, which is the one I want to focus on the most because on the Forex pairs, I'm only trading the 1 hour chart. Definitely range bound in this area. Looking very, very flat right here. Yeah, no worries, Tom. Gold is very interesting. I love gold. So let me show you my favorite instruments. It's going to be the Aussie US dollar. It's going to be S&P. It's going to be gold and Bitcoin. So I love analyzing those pairs the most, I would say. I love trading these ones. That's why I'm trading them live. But for analysis, I do think the ones I just listed are the most interesting. So yeah, gold, a bit range bound in this area. Alfonso, what's up? Good morning to you as well. Where are you from? Because here in Zagreb, it is 4:40 p.m. So you must be somewhere far, far away from me. Okay. Yeah, range bound. Even on the 4-hour, or sorry, even on the 1 hour, it's looking corrective. Right here, we had a range as well. So just the range going into another range. That's kind of it for gold. Now I want to do the Pasadena, California. Oh, nice. So from the US. Very cool. Very cool. I definitely want to visit the US. I want to visit the East Coast, though. Sorry. If you're on the West Coast, I think Pasadena should be. East Coast seems a bit cooler. But yeah, Bitcoin daily. In a descending. So try to break this low, major rejection, huge wick, big bullish candles. But still range bound. Yeah, I'm just not seeing much on Bitcoin right now. I'm looking at this major high, of course, to break. So it is kind of the same story as with gold, right? You have your major levels, you have the highs, you have the lows, and you're looking at a breakdown either like this, and then of course the next candle to continue, or for the price to, let's say, approach the highs, impulse break, and then of course you need the next one. You want the next one to continue up like this. You definitely want the next one to continue up. So Bitcoin, unfortunately, same as gold, bit corrective, bit range bound. I cannot really make a decision based on probabilities, based on technicals, because they're not telling me much. Okay. Nasdaq, same as the S&P. Silver, worse than gold. Silver looks to be dropping. So silver is actually breaking the lows and continuing to drop, not impulsively, but definitely looking much worse than gold. Look at this, compare it. This is the daily chart. This is silver. This is gold. Gold is hovering around the highs, while silver is looking much more bearish, I would say. Okay, Ethereum. Oh, very, very bearish. Ethereum is not looking good. Ethereum is dropping. It broke the major lows. Yeah, it had a really bearish move down. Now it is retracing a little bit, but still from the major high, all-time high. Yeah, I think it's the all-time high. It's down minus 35%. That's significant. Yeah, I would say that is no. Okay, this was the all-time high. Sorry, I'm not really into crypto. I do like Bitcoin, but the rest of the rest of the crypto coins just don't do it for me. I like Forex more. DXY, the daily, very bearish. Alfonso asks, does gold, silver, and platinum move together? Well, I'm not really an expert in correlation, but from what I know and from what trader Nick has explained, because I know he heavily trades both gold and silver, so he definitely knows his stuff. He says that gold is like Bitcoin, and then platinum and silver are like crypto coins. So silver is like Ethereum, platinum is like, I don't know, BitConnect. No, not BitConnect, but I don't know. What is it, that other coin? If I remember, I'm going to write it in the chat. But basically some other crypto shitcoin. So once gold moves, once gold makes the initial move, silver and platinum kind of tend to follow it, right? That is at least what happens in most cases. So when you had this major bullish uptrend on gold, silver followed suit, right? So there is a definite correlation, but I believe silver and platinum are lagging a little bit. So if you see gold moving, but silver has not yet moved, that may be a play, right? That may be a edge in the markets, because if you then get a move on silver and you get an entry, you can be more aggressive because gold has already done a big move, right? So that could be a trading edge. So if you see gold moving and you're trading silver, if you see gold pushing up, there is a high chance, probabilities are telling you that silver will follow suit, and I believe platinum as well. I may be wrong, but I really do not know the metals. I especially do not know the fundamentals behind the metals, but that is how I understood the whole situation. Hope that helps. DXY. DXY is showing some major weakness, right? And a nice question, Alfonso. I like that question. It's a really good one. In Forex, for example, there is a big correlation. Usually all the dollar pairs move at the same time. JPY pairs move at the same time as well. Why do we trade then? Why do I trade free dollar pairs and free JPY pairs? Well, because I need a high probability entry to appear as well. And if I'm trading free JPY pairs, only one of them will print a high probability entry in most scenarios, maybe two of them, right? So not all three of them will actually print a nice high probability flag entry setup. That is why I trade multiple currencies, even though they are correlated, even though they are connected. They are not producing the tiny high probability entries that I need to see. DXY, yeah, dropping down, weakness. 4 hour, a bit flat. 1 hour, 1 hour is in a downtrend. Wow, a perfect flag on the DXY. See this one. I would 100% take this sell setup if this was, for example, the Aussie and the US dollar. You have impulse, pullback, no shift, momentum continuing, major selling pressure. First low, first high, second low, second high. Red candle is the entry candle, okay? So red candle is the entry candle. Stop loss, 20 pips, and that is your trade right there. But again, I'm only trading the Forex pairs. It would be a nice profit as well if you use, let's say, use the smaller stop loss, because I think visually, just by visual assessment, 15 looks a bit bigger. So you would be running some nice percentage. This is just an example, right? Okay, so in a downtrend on the 1 hour, and Alfonso says any currencies that follow each other. So yeah, as I said, currency is very correlated, but usually when you get a move, it will happen on every single currency at the same time. The size of the move may differ, but usually if you get a large push on the euro and the US dollar with a news event, you're gonna get it on the Aussie and the US dollar. I have not seen the case where you have one currency pair moving and then it takes some time for the other ones to follow it, right? Because as you have with Bitcoin, when Bitcoin moves, it can take a couple of weeks for the altcoins to move. It can take a couple of weeks for Ethereum to follow that bullish impulse. With gold, again, when gold moves, it may take some time for silver to follow suit. But with currencies, I would say it's pretty rapid, and you cannot really rely on building a trading edge using that sort of correlation and currencies following each other after a certain amount of time. I may be wrong. I'm only trading the technicals. I'm not trading with that sort of an approach. That is at least what I have seen with my own eyes happen in the currency markets. When you get a news event, when you get a massive push, it usually happens on every single currency pair that is connected to that news event at the same time. Okay, hope that helps. And I think we still have one instrument left. Yeah, US oil. Let's start with the daily. I used to do so now I'm doing a top-down analysis, starting from the top, starting from the daily. I used to do a bottom-up analysis, so starting from the 1 hour. I think this is a better approach, starting from the daily, looking at the big picture, and then zooming in on the actual move. So yeah. Oh, this is flat on the daily. Flat, flat, flat on the daily. 4 hour, a bit of buying pressure, not that clean though. I think the 1 hour is gonna print a better picture. Yeah, 1 hour had a really nice uptrend. Oh, this was looking very pretty. Very high probability, very nice. Large move, a bit of an ascending, large move again, but unfortunately now failing. But this is what I live for, not live for, but trade for. This sort of price action. Large moves, big blue candles. See here, look at these candles, look at these candles. I'm going to highlight them. Major momentum again. And right here, massive momentum. So this is the market condition that I hunt for every single day. These large moves. Doesn't happen often. I do not take many trades. My average is 1 to 3 trades per week. That is 4 to 12 trades per month on average. Sometimes I can have months where I take 0 trades. In the last 2 weeks, in the last 3 weeks, I have taken only 1 trade, right? So yeah, it goes from very active periods to very slow periods, but that's trading. It is never a consistent thing. Markets are not consistent. You're going to have moves of massive volatility, of massive trends, of massive moves, and then you're going to have moves, periods of just stagnant, range-bound, and corrective price action, and those can last for weeks, maybe even months. Like the pound and the US dollar has been corrective for months, so it can happen. And that would be about it. If you guys have any last questions, any last comments, make sure you put them in the chat right now and I can run through it. But this is usually the time where I wrap up the stream. We have gone through all of the instruments. It is the summer, it is August. I know a lot of you are on vacation. I know a lot of you are kind of slacking off on trading. That's all right. I have done it as well. But it is important to still be putting in the daily trade. If you're on vacation, you be on vacation. But if you're not on an actual vacation, but you're slacking off because it is hot outside and it is the summer, that is not something you should be doing. So definitely backtest every single day. Have a daily goals list. That is what helped me the most to stop slacking off. Basically having 4 to 5 goals every single day that I need to accomplish. Sometimes I do not do all of them, but most of the days I do like 80 or 90% of the daily goals, which is enough for me personally to become a bit better every single day. So don't slack off on backtesting. Do your daily forecasts. Keep following the trade plan and keep checking those charts. Keep monitoring the markets because we're getting some moves. As you can see, we're getting some moves. July was a massive month for me, and people think July is quiet. No, I had a 22% month in July. So stay on point. Tom says, thanks. That was great again. Yeah, no worries, Tom. Thank you very much for the support. Thank you also to everyone else for watching and for your comments. It really means a lot. It makes the stream much more fun. I really enjoy answering your guys' questions. And I will see you guys in the next week on Wednesday. That's it. Goodbye.